Pamela, I am going to continue with our previous lesson on budgeting, specifically focusing on cash budgets. We did debtors collection and creditors payment schedule will be done today. And with a cash budget, it's all about cash, as we discussed in the previous video. Now, when you sell goods, you will sell them in two ways. It's either you sell them for cash or you sell them on credit. If you sell them for cash, you will receive money immediately. But if you sell them on credit, it'll depend on credit terms as to when you will receive the money. And we use those credit terms to prepare what we call debtors collection schedule. Here we are calculating the amount of cash that is expected to be received from cash sales and credit sales. But with your debtors collection schedule, we focus more on the amount that will be received from credit sales. For sales that took place before the budget period, we use actual figures, and I did explain this in the previous video. For sales that take place during the budget period, we use the estimated amount. Okay. Cash can be collected from debtors and will only be calculated from credit sales. Cash from credits sales will be received in parts, and those parts will be as percentages. Cash received from cash sales will be received immediately in the month of sale. And I did an example similar to this, okay? But everything is pretty much the same. We know that here we are selling goods. 25% of those goods that we are selling, we sold them for cash, and obviously the other 75% will be goods that we sell on credit. And the other 75%, we are going to collect it using these credit terms. And I did explain this as well. We're going to have total sales. From your total sales, you determine your cash sales. And for your budget period, which is July, September, up to September, those amounts will be shown under receipts for those budgeted months. And your credit sales, these are credit sales. We will not receive them immediately. We will receive them according to these terms and conditions over here. Now that means that 20% will be received in the month of sale, 70% will be received in the month following the sale, and 8% will be received in the second month after the sale. And these amounts are simply calculated using credit sales and not cash sales. And we use that information to prepare this. The amounts might be different, but the principles are the same, okay? We did this in the previous video. Now, these amounts that were collected from debtors, we actually recorded them in the cash budget, and we started with our cash sales for those months and collection from debtors, which was total amounts collected from debtors. We recorded all of that under receipts in our cash budget. All right. Now that we're done with that bit of revision, we are going to do what I discussed at the end of the previous video, which is payments to creditors. Please note that here it's us that are paying the creditors. That will result in a cash outflow. Now, when we pay creditors, the entity has two options, just like debtors. As a customer to the business, you have two choices. It's either you buy from the business cash or you buy on credit. And if you buy for cash, the business will receive money immediately. If you buy on credit, obviously we'll use credit terms to determine how much will be received from you, by the way. Similarly, as the business, we are also allowed to purchase stock for cash or on credit. Cash purchases will be recorded as cash purchases in the month of the purchase. and credit purchases will actually be paid at a later stage depending on the credit terms agreed upon with the supplier. The entity may opt to purchase stock on credit. If stock is purchased on credit, it'll only be paid at a later stage depending on credit terms agreed upon with the supplier. When the repayments are made as per the credit terms, take note of the discount offered by the supplier. Remember, discounts reduce the actual amount of money paid. We will basically pay less than what we were supposed to pay if we are given a discount. The entity should maintain an optimum stock level to ensure that it doesn't have too much stock or not enough stock. So it needs to keep its stock at optimum level, which is not less, which is not more than we're supposed to have. This ensures that the customer's demands are met. At the same time, it ensures that we don't incur more holding costs, because for holding too much stock, there are costs that come with that, unnecessary costs, that is. And obviously, there's theft, which is part of the expenses we might incur if we have too much stock. And then we've got expiry of stock. Obviously, too much stock means that we'll have that stock in the warehouse for a while and we might not be able to sell it because it has reached its expiry date. All right. Optimum stock level means that you just keep your stock enough. You just keep enough stock. That's all. Okay. Now we have what we call a stock base, which is the stock that we need to keep within the business. It may vary from month to month. When calculating stock purchases, the entity will have to determine the amount of stock increase or decrease. This method is not used at high school level, so you don't need to learn that method at high school level. Instead, you need to learn this one here, which is what we are going to use, which is a fixed base stock level. Under this method, stock base is maintained at a fixed value and replenishments or restorations are done on a monthly basis. Note that cost of sales is a good measure of the cost price of stock purchase. This implies that cost of sales will be equal to cost of stock purchased only as stock sold will be purchased to restore trading stock to the required fixed amount. Now, to make that easy for yourself, it means that if I sold five, let me say I'm selling pens. If I sold 5 pens, it means that I only bought those 5 pens. So the cost price of pens sold will be the same as the cost price of pens that I purchased. That's what it means under this method. So cost of sales will be the same as total purchases. Cost of sales will be the same as total purchases. Now, I just need to warn you about cost of sales. Make sure when you calculate cost of sales, make sure that it is cost of sales of all goods sold, not just cash goods or credit goods. It must be cost price of all goods. Now, what am I trying to say? I'm simply saying that make sure that when you use the sales figure, make sure the sales figure that you have is the total sales figure. It's not just credit sales figure or cash sales figure. It must be the total sales value. That's what I'm trying to say here. You can only use the total sales value to calculate cost of sales. Now, sometimes they will just give you credit sales and they will say credit sales is 20,000, right? And since credit sales is 20,000, in total, 70% of our sales are credit sales. Then you'll have to do this quick calculation here. If credit sales is 20,000, what does that mean? It means that this 20,000 is the 70% and we want the 100%. So you'll multiply that 20,000 by 100 and divide it by 70, then you will get your, obviously I used the wrong value here. Can I say it's 60? Let me see if 60 will work. So let's say that 60% of your total sales are on credit. Still not working. Ah, come on. Okay, let's use 40. So if they say total 40% of your total sales will be credit sales, it means that that 20,000 is just the 40%, and we want total sales. So we have to multiply that 20,000 by 100 divided by 40 to get the total sales. If they said it's cash sales, you'll divide by 40 to get the total sales. We work with total sales. You don't work with credit or cash sales. You work with total sales. You use total sales figure to calculate total cost of sales. And that's what this sentence simply means. All right. When calculating cost of sales, always use the total sales amount, not the cash sales or credit sales amount. When given cash sales or credit sales, make sure you first find the total sales figure before calculating cost of sales. The cost of sales amount represents the total purchase. I've explained this before. Use this figure to determine credit purchases and cash purchases. Now, let's use this information that we've used in the previous video. Obviously, I changed values there just to confuse the enemy. Anyway, I hope you won't get confused here. So we are given sales, and our budget period here is from July up to September. Now, I need you to do this for me. Calculate cost of sales for all of those sales values. And you are given here that the markup is 50%. Now, once you're done calculating cost of sales, just write next to that cost of sales figure that these are total purchases. These are total purchases. And how do we know that they're total purchases? Because the information itself told you that we are using the fixed stock base. So cost of sales will be the same as total purchases. Now, 10% of those total purchases will be cash, meaning that other 90% will be credit. I'll focus on cash, okay? Because our budget period is July up to September, I'm only going to focus on cash purchases for July up to September. Now for July, I had sales figure of 360,000. Take that 360,000, multiply it by 100, divided by 100 plus markup, which is obviously 50. Now, this still gets some students. I recently gave a test on manufacturing, and one of my top students got a decimal in that test. And obviously, it was just him that asked me the question. I'm guessing most of the top students actually got it right. Only to realize that, and I told him, okay, I can't answer that question. Actually, you'll have to figure it out. But there's no decimal. And when I looked at his question, because I couldn't answer it, if I answered it, I could have led him to the answer. I realized that when he was calculating cost of sales, I gave them a markup percentage of 150. He multiplied it by 100 and he divided by 150. Please stop doing that. Just because the markup is 150, it's 200%. Do not forget to add it to 100. It's 100 divided by 100 plus markup. 100 divided by 100 plus markup. So if your markup is 150, it will be 100 divided by 100 plus 150. So it will be 100 divided by 250. Okay, here it will be 100 divided by 100 plus markup, but the markup is 50. That's why it will be 100 divided by 150. That gives you your total purchases. However, only 10% of those total purchases will be cash purchases, and that's we will put it under cash payments. And of the 408 total purchases for 408 amounted to 272,000. Find 10% of that, it'll give you 27,200. And the last one will be 25,600. The problem comes in when we get to credit purchases. Because now you cannot calculate credit purchases until you have calculated your total purchases. And you cannot calculate your total purchases until you have calculated cost of sales. And you cannot calculate cost of sales unless you've been given total sales. Understand that. In the exam, they can be bad. They can just give it to you as credit sales. Now you first have to take that credit sales, get total sales, then take your total sales, get cost of sales, and then take your cost of sales, determine which ones were cash purchases and which ones were credit purchases. And cash purchases are quite easy, but you still have to go an extra mile with your cash purchases because they will give you a story like this. Payments to creditors will be made in the month following the purchase of stock good, subject to 5% discount. And immediately when you see that 5%, people show me miracles. We know so far that if all your purchases, out of all your purchases, if 10% of all your purchases are cash purchases, it means that 90% of all your purchases will be credit purchases. So I'm going to focus on the June purchases because the June purchases are the ones that we are going to pay in the budget period, which is July. Now, June purchases amounted to how much? You took your sales figure, which was sales for June amounted to 340,000. You multiplied that by 100. You divided that by 150. It gave you a value. Then you took that value. You must take that value and times it by 90%. So take cost of sales for June and multiply them by 90%. That will give you 204,000. This 204,000 represents your total credit purchases. Of the total credit purchases, you are only going to pay 95% of that. Why are you only paying 95% of that? It is because you were given 5% discount. You are therefore going to pay only 95% of 204,000, and that'll give you 193,800. You also have cost of sales for July. How much were they? You're going to take those cost of sales for July because the cost of sales represents total purchases. Times it by 90%, it'll give you 216,000. Of this 216,000, we are going to pay only 95% of that. And because those were July purchases, we'll pay them in the month following the purchase, which is August. For September sales, you need to take 408,000 times 100 divided by 150. It'll give you cost of sales for August. Then you will take cost of sales for August and multiply it by 90%. That will give you your credit sales for August, which will be 244,800. Of the credit sales, only 95% of that value will be paid in September. And that will be 232,560. Then get your total payments for the budget period. For July, you will have that 193,800. For August, you'll have 205,200. And for September, you'll have 232,560. You will record this as payments to creditors under payments section in your cash budget. Be good? All right. You can complete the cash budget and check out the next video as I finish it off. Okay, we have done up to 8. You can do 9, 10, up to 13. Please note that the opening balance, your opening bank balance for July will be 80,000. Excuse me. Alrighty, please check out the next video as we finish off this cash budget. Thank you for watching and see you in the next video. Don't forget to like and subscribe. Let your friends know. Kgotso.